Okay, so when you hear the word insurance, what's the first thing that pops into your head? Probably your car, right? Or maybe your house. But what if I told you that familiar world is really only half the story? There's this whole other kind of hidden market that insures everything from brand new AI startups to satellites orbiting the Earth. And if you really want to understand the future of risk, you have to understand this other side.
I mean, think about it. Who insures a technology that's never existed before, or a skyscraper that's sitting right in the middle of a hurricane zone? These aren't your everyday run-of-the-mill risks. This is exactly where that other, less visible side of the insurance world has to step in.
So you've got the simple stuff on one side, your car, your home, we all get that. But on the other side, we're talking about massive, complicated, high-stakes challenges that really define the modern world. These two types of risk are so fundamentally different, you actually need two totally separate insurance markets to deal with them.
And here's what that split looks like. About 85% of the insurance world is the standard, or admitted market. But the other 15%, that's what's called the excess and surplus market, or ENS for short. And that's where all the most complex and critical risks end up. Now, don't let that small percentage fool you. This smaller market has a massive impact.
The admitted market is the one we all know. It's highly regulated by each state with pretty standardized policies and pricing. You can think of it as having a big safety net. If an insurance company goes bankrupt, there are state-run funds there to protect policyholders. The whole thing is built for stability and predictability.
The ENS market, on the other hand, is kind of the Wild West by comparison. It's where you go when the standard market looks at your risk and says, no thanks. We're talking about covering things like cyber warfare, revolutionary new tech, or even a pop star's massive world tour. It's this lack of state regulation and backing that gives it the freedom to be creative and tackle these really unique challenges.
So, what is the crucial role this specialized market really plays? Well, you can think of it as the entire insurance system's ultimate problem solver.
This quote right here just nails it. When the standard market starts getting overwhelmed by new, unpredictable risks that it just can't handle, the ENS market steps in to absorb that pressure. Without it, the whole system could get clogged up and, honestly, risk breaking down. And you can literally see where this pressure is most intense. Just look at California, Texas, and Florida. Together, they make up nearly half of all the ENS business in the entire country. And it makes sense, right? It's a perfect storm of massive economic activity combined with a high risk of natural disasters. That's a recipe for complex insurance needs.
But here's the really crucial part. Even though these two markets are separate, they are both getting rocked by the same powerful forces. And if you've been wondering why your own insurance costs seem to be going up and up, this is where you'll find the answer.
So what's really going on behind the scenes? What's driving up cost for everybody? You might assume it's just, more accidents or more storms. But the data actually tells a very different and pretty surprising story.
Here is the absolute core of the issue. It's not the number of claims that's the problem. That's been more or less stable. The real driver, the thing that's blowing everything up, is the price tag on each individual claim. In the industry, they call this severity, and that cost has absolutely skyrocketed.
Just look at this number. In less than a decade, the average cost of a single product liability claim has soared by over 500%. That's not a small increase. That is a seismic shift that's sending shockwaves through the entire insurance landscape.
A huge factor here is something called social inflation. Now, that term just describes rising costs that are driven by societal trends, specifically more lawsuits, bigger jury verdicts, and this whole new trend of outside investors funding lawsuits. This trend alone has pumped more than $230 billion in extra costs into the system in just the last few years.
And this isn't some abstract problem for big companies. It hits your wallet directly. The severity for personal auto claims has been growing by nearly 11% a year since 2019. And for commercial trucks, the ones delivering everything we buy, about a third of their insurance losses are now tied to this explosion in litigation.
So, with all these immense pressures reshaping the industry, who are the actual players navigating this super complex landscape? Let's break down who does what.
First, you've got the household names in the standard market. Your Allstates and GEICOs. Then you have the ENS specialists like Markel and W.R. Berkley. Connecting them all are the brokers, from massive global firms like Marsh to smaller specialists like Ryan Specialty. And holding it all together is the essential infrastructure, ratings agencies, and data firms that basically power the whole industry.
Now, you can't just call up an ENS insurer. There's a formal process. First, a client with a unique risk has to go to their regular retail broker.
That broker has to prove that they tried and failed to get coverage in the standard market. Only then are they allowed to engage a specialist wholesale broker who acts as a gatekeeper to the E&S world.
So, who are these big players taking on all these complex risks? Well, it's a pretty diverse group. You've got the legendary Lloyd's of London, which is really a marketplace of its own. You've got the massive specialty arms of giants like Berkshire Hathaway and AIG. And then you have a whole ecosystem of nimble, specialized insurers who might focus on just one tiny, niche type of risk.
So where is all of this headed? Well, while the standard market is much larger today, all the real growth, all the innovation is happening in that specialty E&S space.
And the projected growth here is just staggering. Today, the E&S market is around $131 billion. By 2035, that number is expected to hit 1.2 times trillion dollars. That's nearly a tenfold increase, and it's a direct result of our world becoming more complex and unpredictable every single day.
This quote really captures the trend perfectly. As we face these growing challenges, from climate change to new tech to legal shifts, the adaptability of the E&S market is making it the true financial and innovative engine of the entire insurance industry.
The industry is really going through a major transformation. We're seeing insurance get embedded directly into products when you buy them. We're seeing positive health trends change risk profiles, like a massive drop in opioid use. But the most significant shift of all is the move away from just paying out after a disaster to proactively using data and tech to help prevent losses from happening in the first place.
And all of this leads to one final fascinating question. As our world keeps grappling with increasingly complex risks, things like cyber threats and climate change, is this specialty market, the one that used to be a niche, now actually becoming the new normal for how we safeguard our future?